Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ingles Markets, Incorporated quarterly report. Ingles Markets, Incorporated offers a wide range of products and services through its chain of supermarkets across the United States. The company provides food products such as grocery items, meat, dairy products, produce, frozen foods, and other perishables. In addition to these essentials, Ingles also offers non-food products including fuel centers, pharmacies, health and beauty care products, general merchandise, private label items, organic and locally sourced items. The company's services extend beyond retailing, as it owns and operates a milk processing and packaging plant that supplies various retailers with organic milk, fruit juices, and bottled water. Ingles Markets also provides home meal replacement items, delicatessens, bakeries, floral departments, and greeting cards to its customers. Furthermore, the company offers broad selections of local organic, beverage, and health-related items. In summary, Ingles Markets, Incorporated operates a supermarket chain that offers food products, non-food products, and various services including fuel centers, pharmacies, home meal replacement items, delicatessens, bakeries, floral departments, and greeting cards. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what could cause a stock price to increase. The stock price of Ingles Markets Inc. has increased significantly over the past year due to several factors. One major reason is the company's strong financial performance. Ingles Markets has consistently reported high sales growth and profitability, which has boosted investor confidence in the company. Another factor contributing to the increase in stock price is the company's strategic expansion plans. Ingles Markets has been expanding its operations into new markets, increasing its market share, and improving its competitive position. This expansion has enabled the company to tap into new revenue streams and improve its overall financial performance. Additionally, the company's focus on customer satisfaction and loyalty programs has also contributed to its success. Ingles Markets has implemented various initiatives to enhance the shopping experience for its customers, including online ordering and curbside pickup services. These efforts have helped to increase customer retention rates and attract new customers, further driving sales growth. Furthermore, the company's commitment to investing in technology and innovation has enabled it to stay ahead of the competition. Ingles Markets has implemented various digital solutions, such as mobile apps and e-commerce platforms, to improve operational efficiency and enhance customer engagement. Overall, the combination of strong financial performance, strategic expansion plans, focus on customer satisfaction, and investment in technology have all contributed to the increase in Ingles Markets Inc. stock price over the past year. Ingles Markets, Incorporated market capitalization of $2 billion is materially smaller than most of its industry peers of roughly $5 billion. Ingles Markets, Incorporated trades at a higher price-to-earnings ratio of 17 times and a lower price-to-book ratio of 0.98 times relative within the industry. This suggests a potential market detachment, as Ingles Markets, Incorporated trades at discounted levels while the broader industry remains fairly valued, warranting deeper fundamental analysis. The company maintains a moderate leverage profile, with liabilities making up 37% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a company can be attributed to several key factors. Firstly, an increase in net sales by 6.6% contributed significantly to revenue growth, reaching $84,863,000. Additionally, rental income from owned and subleased properties saw a 4.7% rise, while future minimum operating lease receipts increased by 12.6%. The retail grocery segment also experienced growth across various categories, including a notable 7.8% increase in perishables sales. Furthermore, All other revenue streams showed a substantial surge of 24.6% from 2024 to 2025. These factors collectively contributed to the company's overall revenue growth. On the other hand, the primary drivers of revenue decline were more limited in scope. The closure of stores resulted in a loss of $2,098, while operating and administrative expenses increased by 5.2%, amounting to $14.7 million. Other income also decreased by $0.4 million, or 12%. These factors highlight the importance of managing costs and optimizing revenue streams to maintain growth. The net income of the company experienced a significant increase between 2024 and 2025, rising by $11,540,030, or 69%. This represents a growth rate of 70.5%, indicating a substantial improvement in the company's financial performance over this period. The profit margins also showed an upward trend, with gross profit margin increasing from 23.3% to 24.4%, and operating income as a percentage of net sales rising from 18.3% to 28.6%. Furthermore, the net income margin increased from 1.3% to 2.1%. These changes suggest that the company has become more efficient in generating revenue and managing costs, leading to improved profitability. The company's financial performance is a testament to its ability to generate positive operating cash flow. For the 3 months ending December 27, 2025, the company reported a significant increase in net cash provided by operating activities, totaling $38.4 million. This substantial amount of operating cash flow indicates that the company is effectively managing its day-to-day operations and generating sufficient funds from its core business activities. This positive trend is a crucial indicator of the company's financial health, as it suggests that the organization is capable of meeting its short-term obligations and investing in growth initiatives without relying on external financing. The generation of positive operating cash flow also implies that the company has a strong foundation for long-term sustainability, allowing it to navigate potential challenges and capitalize on opportunities in the market. The company's debt levels have shown some fluctuations over the past year. While the current portion of long-term debt has remained relatively stable, the overall long-term debt has decreased slightly from $497,289,417 to $494,051,592. This reduction in long-term debt is a positive trend for the company. However, it's worth noting that interest expenses have also seen a decrease, dropping from $5,010,989 in 2024 to $4,607,073 in 2025. This reduction in interest expenses suggests that the company may be benefiting from lower borrowing costs or more efficient debt management practices. Overall, these changes indicate some positive developments in the company's financial health. Management is optimistic about the company's future outlook. The key areas of focus for the upcoming year include upgrading its existing store base, investing in new technologies and equipment, and expanding its physical presence with one new store. This strategic approach aims to enhance operational efficiency and competitiveness. The company plans to allocate a significant portion of its capital expenditures towards improving its store infrastructure, which will likely have a positive impact on customer experience and sales growth. Additionally, the investment in technology improvements and equipment upgrades is expected to drive productivity gains and reduce costs. Management's commitment to investing $120–160 million in capital expenditures for fiscal 2026 demonstrates its confidence in the company's long-term prospects. This strategic allocation of resources will likely position the company for future success and growth. The company has a history of paying out dividends to its shareholders. According to the provided summary, cash dividends per common share are listed for both Class A and Class B common stocks for the years 2025 and 2024 on page 4. Furthermore, the dividends paid amounts for these 2 years are stated as $3,067,386 and $3,067,331 respectively on pages 10, 14, and 22. This repetition of information confirms that the company has indeed paid dividends to its shareholders in both 2025 and 2024. Concerns about inventory buildup and supply chain disruption have been raised due to recent events. One area of concern is inventory buildup, which has resulted in increased merchandise costs. Specifically, costs rose by $49,526 from 2024 to 2025. Supply chain disruptions also pose a significant threat. The company has faced challenges related to Hurricane Helene, including partial payment for inventory loss claims and temporary store closures due to damage sustained during the hurricane. Although the distribution center was able to return to full operation within 2 weeks, 4 stores still suffered damage, and 3 remain closed as of this report. That concludes the financial summary for Ingles Markets, Incorporated. Feel free to comment below, and I will be happy to answer them when possible.